Head of Communication Strategic Partnerships at First Digital. So I'm going to hand over my microphone to Karen.
Hi, everyone. Thanks for joining us today. I'm very honored to kind of moderate this panel with our esteemed panelists. I think we're going to start by getting you guys to give a brief introduction on your background, your current role, and the firm that you founded or work for.
Yeah, so hey everyone, I'm Janson. I'm trading. I do the trading here at Cega. Cega is a decentralized structured investments protocol. We help users generate 8 to 60% plus APY on their USDC deposits with built-in downside protection, higher yields, and protected strategies. So Cega has processed about 300 million in trading volume to date, and we have launched on Ethereum, Arbitrum, and Solana.
Hey everyone, great to be here. This is Kennelly, founder and CEO of Volmex Labs. At Volmex, we build the leading crypto volatility indices, which are BVIV and EVIV. We're the only Bitcoin and Ethereum indices available on TradingView. We also build a DeFi DEX, a perp DEX around that, and a couple other sorts of products. Great to be here.
Hey guys, I'm Yong. Thanks for coming here. So I'm a CEO and co-founder of Presto Labs. We're an algorithmic trading firm founded in Singapore. We're trading both TradFi and crypto. On the crypto space, we're trading about like $1 billion a day on average with our prop book. And then we're also, as a market maker, providing liquidity to the various projects, especially on the day one market making purposes. Yeah.
Great, thanks for the introduction. I think we're going to start with, what is your current outlook on the crypto market and how has it evolved in recent years? And that's open to all of you.
I guess I'll start. So personally, I am quite a flat to moderately bullish. I personally think that for the rest of 2023, we're not going to see any high volatility events. So unfortunately, I feel like it's going to be quite boring until the end of the year. I'm personally really bullish for 2024 though, because there's a few events that I think could be potential catalysts. So first of all, I think that the main one is the Bitcoin halving. So if you, just a kind reminder to everyone that 1 year after each Bitcoin halving, the price of Bitcoin has actually more than doubled through that year. So for long-term investors that are looking to make some money in crypto, I think that now's a good time to start buying incrementally. I wouldn't do it all in one shot. I think that doing it month by month or week by week, amount that is suitable and do it on a consistent basis is a good strategy. The second catalyst that I think could potentially spike on markets would be the Fed announcing that they're pausing their rate increases. So the Fed since March of 2022 has been quite aggressively hiking rates, and with the expectation of many market participants are expecting that rate hike is going to come to a pause during the end of the year, and whether the Fed actually takes this path is uncertain, but it's likely, and I think that given this announcement, it's if they do announce this, I think it's a positive for the macro environment and hence crypto. Over to you guys.
Yeah, I resonate with a lot of the points Janson mentioned. Markets, I'm super long-term bullish. We're still building and moving, very as quick as we can and investing a lot in the space. I think that, market's been a little lethargic in the last couple of months. Realized vol, implied vol are sort of at, historic lows. But, summer's over. Eventually the ETF news will pick back up. Some of the halving stuff as well. So, and, interest rate cuts eventually. And so, crypto is going to come back and, super excited about, next couple of months. I'm sort of a perma bull, but obviously last couple of months have been, year and a half have been interesting. So long-term bullish very much.
Yeah, I kind of agree with pretty much all the points that you guys pointed out. The market is kind of stuck in the $30,000 available for Bitcoin for quite long. Just because, last year we experienced a lot of bad events. Unfortunately, FTX collapsed, and many governance failures. I think that changed the sentiment, especially the smart money, big monies. They step away, and then they're just waiting for some reasons to come back in. So I think until we see some clear regulatory improvements or those sentiment changes, I think we cannot see like a big momentum for a while. Yep.
What are the most important factors driving the investor sentiment, do you think?
So important factors driving investor sentiment is, especially for crypto, I think is hype. So currently, I think there's not enough hype in crypto. I think this also goes with the risk-reward perception to retail investors about crypto. Currently, if you ask anyone on the street, do you think Bitcoin is going to go to 100K by the end of the year? Probably no one's going to tell you that. But if you ask this question, maybe a year or two ago, there's people that will tell you that this is going to happen. So this is also a hype issue. I think that other things that drive sentiment are the performance of the asset class in general. So in recent times, a lot of other markets have been going down. There's only one market that's been performing well this year, and it's that U.S. equities. Personally, I'm from Hong Kong, and the Hong Kong equities have been just really trash this year. So I think a lot of people have invested their money into U.S. equities and putting their capital and allocating their capital into other asset classes rather than Bitcoin or cryptocurrencies in general.
Maybe.
Yeah, and also, as I said, I think a lot of people are just waiting for some headline news from the U.S. regulators, because if BTC ETF is approved, then there can be a huge catalyst. But there is so much uncertainties in politics and regulatory side, so people are just waiting for it and just keeps tracking the news, and then and there's not much money inflow into the crypto market at this moment. So a lot of price movements are dominated by the macroeconomic events, like numbers, the CPI headlines, rate hikes, ECBs and Fed. Those numbers were not so important back in 2021 because enough money was already coming in without those newses. But now everyone's looking for those external factors. So yeah.
When do you see a recovery happening? I think everyone wants to know, including me.
A recovery will go to the point, it goes back to the point I talked about, I don't think it's going to come this year. It might come slightly, we might recover to 28, 30K max I personally think it max by the end of December. But I think the recovery will come during the start of 2024 when actually, this actually goes to another point where I think a lot of the funds or the institutional investors that have generated a lot of profits this year, they will start toning down trading activity towards the end of the year because they want their books to look good. They want their numbers to look good. So they'll probably tone down the trading activity towards the end of the year. And once this beginning of 2024 comes and they need to redeploy their capital into the markets, that's when I think that the potential for the price increase for Bitcoin to come. And yeah.
Yeah, well said, Janson. I think some of the points we touched on earlier regarding ETF flows halving and interest rates could create a little perfect storm for crypto to go back up. So whenever those things sort of align, could be beginning of 2024, as Janson said. No one really knows. Don't have a crystal ball, but eventually, grayscale ETF or GBTC conversion is inevitable, I believe, and also the BlackRock stuff. So I think that sort of thing would bring a lot of Wall Street buy-side folks or institutions in general to the space. And so 2024 should be quite bullish, but who knows?
I'm going to go into some of the more granular questions around trading strategies. crypto markets can be obviously less liquid than traditional markets, and especially in this bear market, like liquidity is quite thin on the ground. How do you address liquidity challenges in your trading activities?
That's a good question. So even in traditional markets, not all the, let's say, for example, in stock markets, not all the single names have enough liquidity. So some less popular stocks and some less developed stock markets, they also have the similar problems. So, when you run your strategies, you have to adjust your market impact. You can actually run some simulations to estimate the market impact. You have to adjust your strategy size based on the market liquidity. Yeah, and like crypto markets, as you said, the absolute value of liquidity is thinner than traditional markets. That's true, but it's open 24/7. And then if you have to trade on something on the weekends, where do you go? Like the CME is not open, so you have to go to like some centralized exchanges, some DAX. I think from that perspective, liquidity is there, especially on holidays and weekends. Yeah.
And
yeah, I just wanted to say a few more things about liquidity. I personally think that liquidity in crypto markets is actually, good. I don't think it's like, poor to let's say, especially with what do people trade the most? It's like they trade the perps, and people who want leverage trading, they will go to trade perps wherever they find it, and the liquidity for perps is still very good. I mean, for me personally, when I do execution, it's like there's not much slippage when I execute perps on BTC ETH or even some other altcoins that we're trading. So yeah, I don't think that liquidity is poor, so to say. Yeah, of course for exotic pairs or less liquid, non-USDT based contracts, they are less liquid, but I think the big ones are definitely they are more liquid, relatively speaking.
so regulation has been like a recurring topic in the space. How does regulatory changes impact your trading strategies? Maybe Cole, you can take.
Yeah, so great question. Thanks, Karen. So at Volmex, we build a number of products that are DeFi or sort of in partnership with other folks, and so we're constantly paying attention to the regulation. We're not a trading shop, but we're a software developer and of the BVIV and the EVIV index and the linked products, and so paying close attention to regulatory developments in the U.S. and globally, and hope to see very thoughtful regulation for crypto derivatives in the U.S. for perps and perps are not available in the U.S. but options and things like that, and so I think it's definitely a big factor, but it's sort of a little bit nebulous at the moment. But it's not something that we worry too much about day to day. It is what it is, and we trust that there will be thoughtful regulation in the end, and feel confident about that. So something to pay attention to, but it's something that's out of our control, right?
So the next question pertains to sort of the high interest rate environment, and this is one that I'm interested in because First Digital has launched its own stablecoin, FDUSD. Given the high interest rate environment, what would be the best way to utilize stablecoins?
You can deposit your stable coins in some staking services, centralized exchanges to earn some yields. But honestly, the traditional financial markets, as you said, is already generating even the U.S. base interest rate is already 5.5%, and even very conservative money market products can easily generate some high single-digit yields. So at this moment, it's not so attractive, I would say. But when the market comes back, the demand on the capital, on the stables in crypto market will go up, and then I think the expected return will definitely go up as well. So I think it's seasonal.
And how do you see cryptocurrencies fitting into a broader investment portfolio alongside traditional assets? And that's for all of you.
So, as a broader macro part of a broader macro book, maybe for a macro fund, I think that most fund managers would probably think about deploying a single-digit percentage of their capital to crypto. I mean, that's just the reality. I think that given the historical historical expected volatility of crypto, I think that not many fund managers can take that variance in the P&L. So I think as a traditional fund manager, you would not deploy that much capital into crypto. I would probably do mostly in equities and then some commodities and then some other alternative assets.
Yeah, I think it fits in their broader investment allocation strategy, but they can look at it in a low vol regime, it's like a 45 vol, 40 vol asset, but a positive vol, regime or high vol regime, positive spot vol correlation, excuse me. You can see it at 80 or 100, and so if there's an 80 or 100 vol asset, it's not going to represent a huge percentage of the portfolio because it's obviously more risky, and so as Janson said, a single-digit percentage of their portfolio could be allocated to crypto assets like Bitcoin or Ethereum. And as the market matures, maybe that mandate gets expanded. And so definitely a very useful asset class for traditional investors, and expect to see more allocations.
So crypto markets previously followed a 4-year cycle pivoting around a Bitcoin halving. What do you think is likely to happen this time round, and what would be a good way to navigate a potential cycle?
Yeah, so in the past, the BTC dominance was, I think, 90%, before 2021. So at the time, crypto market is pretty much BTC market, and then at the time, the inflation rate triggered by the mining was about 4%, or even before the cycle, it was 8% or 10%. So at that time, the halving had fundamental meanings. So that rhetoric actually triggered a big rally. But I think this time it's already 1.8% inflation rate, and then BTC dominance is only 50%, I think. So the fundamental effect will be quite limited for this time. But I think the story repeats itself, so maybe a lot of people will still believe in, and they will come back. So there will be some volatilities, some price actions, but I don't think that the fundamental effect will be that great this time.
Maybe Janson, you want to add some color?
Yeah. So actually, for talking about volatility of Bitcoin, historically, for the past three years or so, I've been in the crypto industry. Ethereum has higher volatility than Bitcoin, but recently it's actually swapped around. Bitcoin has more volatility than ETH. So I think that Bitcoin will still be the driver of price. Like for example, I think a few weeks ago, Bitcoin there was a flash crash where where BTC and ETH dropped 10% in 5 minutes. So during that time, Bitcoin actually dropped more than ETH. That I believe there was more liquidations for BTC, and I believe that BTC will still be the key driver of price action in the times to come.
Do you think there will be an impact from security tokens and tokenization of real-world assets? How would you position yourself for upside whilst minimizing risk? Cole?
Yeah, so this is a space that I've been paying attention to since 2018 when I first heard about tokenized securities, and I was more green in crypto. I think it's definitely going to be a big thing long term. There's a lot of interest from Wall Street, from a narrative point of view, and there's a lot of projects like Ondo and some interesting real world asset stuff. TLDR, I think it grows the overall pie for DeFi and for crypto generally. It's obviously, but there's certain, these are securities that need to be regulated in certain ways, and you need to invest in legal and compliance, and it's not, there's a lot of things you need to do to properly launch security tokens or real world asset tokens, and so I think it's going to be very big. I can see that will drive folks like MakerDAO and Chainlink are thinking a lot about that. I can see how that would be a big boon to both of their businesses, adopting real world asset stuff and can grow the overall, TVL or the, amount of value secured. And so very positive on the idea. We don't have a real world asset play at Volmex yet, but I have some ideas and think that, there's a lot of interesting stuff going on there, but it's sort of coming to market now, evolving. Great question.
And actually, you mentioned DeFi. DeFi is actually in the midst of a downturn at the moment. So how do you all sort of envisage that will turn out in the coming months?
Yeah, so I've been paying attention, to DeFi since I met Hayden Adams at a small meetup in 2018. It, has been a really interesting journey to watch it bubble up in 2020 with DeFi summer, and then sort of deflate a little bit with, the bear market and some of this, some of the price action. I think DeFi saw TVL go down a lot because a lot of TVL is denominated in tokens and Bitcoin and Ethereum. And so if you're looking at DeFi Llama, it's sort of intuitive to think that it makes sense that, it's down so much because it's denominated in coins. But I think DeFi derivatives, order book based perps and options, specifically things like we're building at Volmex and others like Cega, will be, a big boon to DeFi and help grow the overall space. I think that a lot of these platforms are coming to market now and haven't really been in market. There's been a lot of AMM-based derivative products, which have been kind of wonky, and there's a lot better implementations coming to market. And so bullish on DeFi derivatives, growing the overall DeFi space. I think that will be probably the biggest driver to DeFi. But it's excited to see TVL of DeFi go from, say, 50 billion per DeFi Llama to 1 trillion in the next cycle or so. So I'm very optimistic about the future of DeFi and think that come back in a big way.
I think it goes, DeFi is, not, I wouldn't agree that DeFi is in a downturn. I think that it's actually has to deal with an issue of trust from the mass users. I think this trust has been breached last May in 2022 when Terra Luna happened and everyone had to withdraw their funds, and I think the general audience or the general retail investor is not looking to deploy their capital in DeFi currently. Nevertheless, I think Cega as a platform actually has been growing 16% in TVL in the last 3 months, and also we've grown we 3x'd our user base in the past 3 months as well because we've launched on Arbitrum. People, users can stake as little as $1, one USDC on our platform up to however much they want. So I don't think personally I don't feel the downturn. I feel that DeFi is here to stay. I think right now DeFi platforms should really spend their time building their products, refining the UI UX. And when the bull market does come, I really strongly feel that the users will come back and they'll go to the best products.
Would you agree with that, Yongjin? Because there's been a lot of hacks happening recently.
Yeah, I think the challenges on DeFi is a few things. First of all, it's regulatory challenges. A lot of I think governments are pushing for FATF standard for many CX platforms, and I think that's the next target will be DeFi. I would say, because right now a lot of users are a lot of DeFi users are using DeFi, not CeFi, partially because you don't need to go through KYC, and those name checks and travel rules are all exempted. I would say, and I think eventually the DeFi will get questioned. How are we going to cope with those money laundering issues and all those headaches? I think that's a first challenge. And then the second one is, I would say, security issues. As an institutional side point of view, it's hard to deploy a large amount of capital to DeFi at this moment. I mean, it's debatable, but I want to say that those two problems are still there. I think, but in the end, I think DeFi will resolve these problems, and when the market comes back, TBL will grow, and then the expected return will boost up, and then the cycle will come back. But I do see those two problems.
And what do you see, sort of, what trends do you foresee in the crypto market in the coming years? I say that crypto is years is a long time. And how do you plan to capitalize on them?
I'll jump in here. So we're talking a lot about derivatives. I think that options and vol products are obviously underrepresented relative to how big they are in TradFi. Options are many multiples of the size of the crypto market and the traditional finance markets. So I'm very optimistic. I think that will grow a lot. Regulated derivatives, CME has grown 4 or 5x since 6-7 months ago. There's a demand for stronger counterparties post FTX, right? People want assurance that they're trading on a solvent exchange and a strong counterparty. So think that that side of things will keep growing. And then, of course, as mentioned a couple times, DeFi derivatives will be a big trend. And so we have a number of plays in these space at Volmex, different sort of derivatives and DeFi derivatives or partnerships. And so I think that will be really big for the space overall. What do you guys think?
Yeah, so actually, I at Cega, we also believe that DeFi derivatives will drive the next bull market. Derivatives, actually, to the general audience, I don't think derivatives. They feel like it's like a risky word. Actually, well, I don't think so. If you don't leverage with derivatives, you can post full collateral. It's actually a very efficient way of using your capital. The derivatives can be very customized to the investor's needs. They can have built-in downside protection. They can have you're bullish with built-in downside protection. So there's actually many different ways you can structure your derivative to suit your investment profile. So I feel like when high net worth individuals or family offices realize that when banks the products that they're buying from the banks, how much they're getting scammed by the banks, and they can actually just go to DeFi and have the same product, but have trade it more efficiently, more transparently. I think that this will be the big driver for future growth in DeFi.
And do you have any final tips for the audience? I guess the billion-dollar question is, how do you maximize gains and minimize risk? Is that possible in crypto?
I think if you're a long-term investor, you can. I think it's a good time to buy Bitcoin, Ethereum, especially those major ones at every dip, because it's quite cyclical. It comes and goes. It's coming back, and we just don't know when it's going to happen. But it's quite obvious that the total money supply will permanently grow, and then the money has to go somewhere to hedge that risk, systematic risk. So I would suggest to keep, accumulating those, the major crypto assets, especially during the winter time.
Yeah, I think dollar cost average is a reasonable approach for a lot of folks who maybe don't work in the industry or have a strong opinion. Dollar cost averaging the majors, as you said. Also just other high tokens that have promising, businesses like maybe MakerDAO or things like that. So I think that, not financial advice, but I think that, BTC, ETH, and then, a lot of, DeFi coins or a couple of DeFi coins that have promising, prospect would be good things to think about. And, dollar cost average, though, the majors is probably the main thing to be considering as a retail investor.
Yeah, I totally agree with both your points. I would say that if I were to allocate up 100% of my portfolio into some assets, I would maybe 40, to have solid figures, I'd be 40% BTC, 30% ETH, 20% maybe in I hate to say it, but traditional equities and bonds maybe during this time. And I would actually allocate the last 10% into maybe a staking protocol like Volmex or Cega, where we can actually generate higher returns based on our USDC deposits.
Well, I'll open up the questions to the floor. If anyone has any questions, just please put your hand up. Okay, well, thanks for your time, guys. It was really informative and insightful for me anyway. So, yeah.
Thank you.
Thank you for listening.
Thank you.
Great to be here. Thanks, everyone.
Thank you, ladies and gentlemen. Once again, please give a big round of applause for these great speakers and also our moderator.